Hello, this is a Tradesight Tools recap. Today I wanted to talk about our 24-hour market directional tool that we use on the Forex market. You can use this on any of the Forex symbols, but also on the US dollar index. And what it's meant to show you is a shift in momentum in the market, key places where the buyers and sellers are going to sort of leap forward and carry the market with a little bit of extra speed than what you're seeing most of the day. Now here's a look at this tool. Resets every day at 5 p.m. Eastern Time, which is the general close of Forex globally. On this chart, that's represented as 1400 because I'm on Pacific Coast, so it's 2 p.m. Pacific Coast time, which is right here. And you can see there's basically three key lines that I want you to focus on. There's a flat red line right here. This is the opening level. It's the first price at that 1400 print. Then there's a line, the red line that's moving down around here. This is what we call the midpoint. Okay, so basically it's the average of the high and the low of the session so far. It just follows right down the middle of trading for the day. That line is red when you're trading beneath it. It turns green, as you can see right here, when you're trading above it. And then this last line right along here is the short-term moving average. This is just sort of a 10 EMA that follows the market around. And between those three lines, when you're above two or more of them, the market direction is considered to be green. When you're below two or more of them, market direction is considered to be red. And so let's watch on this particular day. This is September 20th, 2012, and see how the market directional tool is useful. Now again, at this point in time, we're barely getting into the Asian session, so anything that happens here early, not really all that interesting, but it's what happens as the day progresses that gets a little more unique. And there's a couple extra lines on this charts. I'll point them out as we go here. There's a purple line is the VWAP, it's the volume weighted average price, and also you'll see some trend lines, this green line up here, this new red line down here. Those are static trend lines from our Comer tool, so we're not as focused on those today. One of the things you'll notice is that the VWAP is often very close to the midpoint line. So right now the midpoint line is this red line right here. The purple VWAP is right with it. So as we trade through this early trading action, what you're going to see is, watch how we use the VWAP midpoint area. See that? Come right up to it. And again, this is early action. Nowhere near the European session. We're approaching, I guess, the European session. But see that test of that midpoint VWAP area? Alright? And we pull back down a little bit. Now, what this means is at the moment, market direction is solidly red. We're under all three of these lines. So if you're looking at trading the US dollar index or any of the Forex pairs, your current trade should be looking on the short side of the US dollar. Now, what happens if we break back above both the short-term moving average and the midpoint? Then market direction turns green because we're above at least two of the three lines. And see how when market direction is red, see what happens from that? Big move down. Alright, now we're getting very close to entering the European session where the volume and activity should pick up. But also we could get a change in direction as new players come into the market. And notice here at this point, the VWAP's a little slower to come down to it, but the midpoint is right here. Okay, so again, this is really the key number right now, because if you cross above this midpoint, you're above two of the three lines. As long as you're below it, market direction is red. Okay, so here's a look at the chart. Okay, here's midnight Pacific time, so we're entering the European session for sure. Came up near that midpoint, couldn't get through, and boom. Notice how once you break it, look at the big move that occurs. It's this line that's really the key to that break. Okay, and then let's watch where the market's allowed to go on that move. Right up and retests that flat red line up there. If you recall, that was the opening level. We can't get through. Okay. Now we come back, a little pullback once again. Another attempt at the opening level. Still can't get through. Look at this. Bar down, and now we're taking out the market directional midpoint, so we're actually going so that we're under two of the lines again. So again, you're getting a momentum shift. And look at that move. That's a big move down once you cross that line. I mean, look at that. Huge move down. So all of these levels are very important, okay? Individually on their own, the opening level of the day, the midpoint of the day. But when you combine the two of them and you realize that every time you flip from being two or three in one direction to being at least two in the other direction, that's where the players are really changing up what's going on in the market. And those are the immediate points that get you big moves.